Hey everyone, how's it going? My name is Richard, and today we'll be talking about the opening range breakout, which is an excellent short-term trading tactic, which you can use for day trading, swing trading, even position trading to establish or trade around core positions. So here's what we'll cover in today's video. Short-term tactics, what is an opening range breakout, why you should always consider multiple time frames, how to use the opening range breakout on a gap up, gap down, stop loss management, and then finally some key takeaways. So the first thing to keep in mind with the opening range breakout is that's a short-term trading tactic like the oops reversal or the wick setup. So depending on your time frame, you're going to use it differently. For instance, investors should ignore this video. It's not for you, just dollar cost average into high growth stocks over the long term. But for instance, position traders who have time frames of weeks to months, you can use this tactic to trade around a core position or buy, for instance, earnings gap ups. For swing traders who have time frames of days to weeks, you can establish positions on this. And for day traders, you want to use this all the time. This is a great tactic for your time frame. So the important thing is to know yourself, know your style, and focus and be the best at that time frame. Moving on, let's talk about first, of course, what is an opening range breakout? Basically, it's when we have the opening print and then some type of consolidation range that forms, and then we have a breakout through that high. And this can be on a 5-minute, a 15-minute, 65-minute, but obviously the higher the time frame, the more substantial this breakout is. And I want to reemphasize, this is not a setup for everybody. You have to be watching your screen or have alerts set to catch this type of move. And definitely I would encourage people to ignore the 5-minute as much as possible, even the 15-minute, and focus even on higher time frames, even if you are an active swing trader. We all know that from contraction comes expansion. From this range here comes a breakout and eventual trend, and similar to a base breakout on a smaller time frame. And this can be after a gap down, gap up, or just a flat open. And what this allows you to do is basically manage risk very tightly at the low of the breakout bar or even the low of the day here. And if it works, get a profit pretty much immediately and either move your stop up if you're very active, or just kind of get at that profit so you have a little bit of cushion to work with on a higher time frame. And lastly, as I'll really get into on the next slide, you always want to consider higher time frames when using the opening range breakout and have situational awareness. You're not going to use this in the middle of nowhere. You want to trade against a key pivot, key level, and use this as a short-term tactic within the overall context of a strong chart pattern with a good opportunity. So here's the slide on considering multiple time frames. First off, I focus on true market leaders, TMLs, which have great earnings, sales, margins, great relative strength as well. And depending on your style, your version of a true market leader could be completely different. You could be focused on those meme stocks, and this works for that as well. That's just kind of not my particular focus. I kind of want to kind of position myself in the best growth stocks of the day in that market cycle. And you always want to use the opening range breakout within the context of a strong stock on a higher time frame in a strong pattern. And this can be up the right-hand side of a constructive base / right below a pivot, which is how I bought UPST early on last week. And you want to look at monthly, weekly, daily primarily, and then the intraday is just about execution, keeping risk as tight as you can. If you're a swing trader, obviously if you're a day trader, you're going to be looking at intradays all the time. So here's a chart of UPST. It's a strong stock with an overall strong chart pattern. It moved up after a power earnings gap, had a nice trend, and then formed a high tight flag base. And I bought it using the opening range breakout on this day right below a weekly pivot. So everything is set up on the higher time frames, and then the intraday setup here, this breakout, which is actually on the previous slide here, is a 15-minute time frame of this open and the breakout through the pivot. So this started a nice trend, and if you got in right at the open, setting alert at the high of the day, you could have managed risk versus that low of the day and get in really nicely with a great cost. So that's kind of the benefit of the opening range breakout. Use it within the context of an overall daily, weekly, and monthly setup. So moving on, let's talk about opening range breakouts after gap ups. And this could be after a news event, earnings, but basically what this opening range breakout after the gap up allows you to do is not enter blindly, just kind of hoping it will continue on with the move. Instead, you're letting the supply be absorbed here. And then when demand overcomes that supply, that's when you get in on the opening range breakout. And also, as I mentioned, you want the opening range breakout to coincide with higher time frame pivots. So here we have a chart of AMBA here from a few days ago before it had a nice push for a few days. You can see that the opening range breakout after this gap up formed, and this pivot coincided pretty closely with a daily pivot on this day and actually the previous day as well. It's just off screen here, but this is the best kind of way to go when you have full time frame continuity. This pivot breakout lines up with a higher time frame pivot, and then that continues on, and that's basically how you get a profit right away as multiple pivots line up and coincide together. With gap downs, you can also use the opening range breakout. I would be a little bit more careful with this because you are kind of trading against a trend a little bit, and I always want this to be in a strong stock and an overall strong pattern. So I'm not just using this in a stock under its 50-day trending below the 200-day moving average, under distribution. I want to be using this setup after a gap down in the strongest stock in the market when I'm expecting a quick response upwards. Maybe the overall market gap down, there's some overall weakness, pulling everything down, and you want to see relative strength occur and an opening range breakout. So basically you can use the ORB to enter a strong stock after a gap down, often coinciding with an oops reversal. Now an oops reversal is when we gap down below the prior day's low and then break out through that. So I've made an entire video about that setup. It's also another short-term trading tactic that is extremely effective. And it often coincides with an opening range breakout. So if you're curious about that setup, I'll have it popping up right now and in the description. And this is actually the example I used for that video, Roku, a few weeks ago. We had a gap down with the overall market, then a strong response from the stock breaking back through the low of the day. And you also had the opening range breakout on a 15-minute, actually a 5-minute chart here. You can see it actually failed the oops reversal, pulled back to basically the pivot of the opening range breakout, never undercutting the low, which is where your stop would likely be. And from this point on, we start a nice multi-day trend. So getting in right here and keeping that risk tight allows you to really have a great risk reward ratio if it does pan out and start a multi-day move, which is the ultimate goal with an ORB or an oops reversal. And often these pullbacks and these ranges form at key levels such as moving averages, horizontal support. So you've got kind of multiple things coinciding together and adding to your conviction that there are buyers right at these levels. So that is ORBs after gap downs. Next, let's talk about stop loss management guidelines. So first of all, this is an intraday setup. So you're going to be shooting for very tight stops, much tighter than the classic can slim 8%. I definitely shoot for less than 3%, ideally less than 2. And usually my stop is under the day's lows or under that breakout bar from the oops reversal. And depending on your time frame, you can move up your stop to break even as it works, or just kind of move and shift your focus to a higher time frame to manage things once things actually take off and move in your direction. Here we've got a 15-minute chart of coin. It actually had a few opening range breakouts within this recent run. The first one was a few weeks ago. You had a gap up and then a 15-minute basically opening range breakout breaking through that high of that 15-minute chart. Trended nicely. You could have kind of followed it up at the lows if you're an intraday trader, or just kind of manage your stop on a daily if you're a position swing trader once things started working. And what's interesting is you can see it had another opening range breakout, but then the next day we had a gap down and then a strong push up. I actually bought right in this area, and you can see that this pivot here, the opening range breakout pivot, was support the next day. So this is all kind of coinciding together. These are things you want to be noticing, and you want to know that there could be potential support at that area. And then this was actually an opening range breakout all the way down at a 1-minute time frame. So just things kind of coming together. Look at higher time frames, then narrow down to lower time frames for your execution. And as I said before, the higher the time frame you look at, the better. Don't be looking at 5-minute. Don't be looking at 1 minute if that's not where you want to execute. There's a lot of noise at those levels, so be careful. I would highly recommend sticking with 15 minutes as your lowest time frame. So that is stop loss management. 2 ways that you go about it. Just kind of follow your stops up with the stock as it works, or even just shift to a higher time frame, the daily, once you have a little bit of profit. So here are some key takeaways. Once again, this is not a tactic for everybody, just really for shorter-term traders or people who want to really manage risk tightly. Use this in strong stocks and strong patterns on higher time frames, often coinciding with pivots and potential support on those higher time frames. And finally, opening range breakouts do fail. You got to manage risk and use a stop loss, and be smart about when you're using this tactic and also what stocks and conditions you use this tactic in. So overall, that's the video on the opening range breakout. Let me know your feedback down below. If you enjoyed this video, please go ahead and leave a like down below and subscribe if you're new. And I'll see you guys in future videos. Thanks.